Hello and welcome to the first trading day of this week. Here's what's coming up in the next 55 minutes. The fourth annual African Union MSME Forum kicks off in Abuja, Nigeria from the 23rd to the 27th of June 2025. And we get expectations for the West African economy as governments pledge for more collaboration. And global markets react to geopolitical tension in the Middle East. Which markets are making money and who's not? That's in a moment. It's great to have you join us. I'm Ladi Williams. Let's get a check on the markets that we track now, starting as usual with oil. Definitely, oil moves everything. At this point, 0.47%. That's what we're seeing for Brent. From the big jump we saw earlier today, $77.37 a barrel. That's for Brent crude, WTI. That's the U.S. grade. That's also up 0.41%, continuing on the over 0.7% rise that we saw earlier there. And, definitely it's all on the Middle Eastern conflicts. Right now, we're still seeing investors react to what's playing out there. U.S. President Donald Trump said he had obliterated Iran's main nuclear sites in strikes over the weekend, joining an Israeli assault in an escalation of conflicts in the Middle East as Tehran. They vow to defend itself at this point, and we're seeing the impact there on most of the markets. Looking at other markets now, we're seeing gold prices that ease today as the dollar held firm, while market participants remain cautious, watching for any potential Iranian escalation. Then for spot gold, that was down about 0.2% at $3,359 per ounce. U.S. gold futures fell about 0.3% to about $3,375, while the dollar, that rose against its peers, making gold costlier for foreign buyers there. We'll get the prices of what's playing out there in the metals market. There you have it. It's just red for the gold futures and spot gold. But other metals that we track, that we see palladium doing strong. They're 1.90%. Still maintaining that $1,000 psychological level. Then we see platinum over that level by about $287, up 1.80%. We see silver. Silver is shining too, $36.14 per ounce, 0.40%. So that's a picture right there in the metals market. To other stories now, the Nigerian Exchange Limited, the wholly owned subsidiary of the Nigerian Exchange Group, and the International Finance Corporation, that's IFC, a member of the World Bank Group, have co-hosted a technical capacity building workshop to advance labeled bond issuance in Nigeria, supporting the real sector and accelerating the country's sustainable finance objectives. The workshop themed Unlocking Sustainable Capital for the Real Sector, a deep dive into the labeled bonds issuance process, brought together issuers, market operators, institutional investors, regulators, and policymakers for practical discussions on opportunities and challenges within the sustainable bond ecosystem. Labeled bonds, including green, social, blue, and sustainability-linked instruments, are increasingly used globally to channel private capital into climate-resilient infrastructure, clean energy, and inclusive development. And the fourth annual African Union MSME Forum that kicked off in Abuja, Nigeria today, is going to last till the 27th of June, bringing together policymakers, development partners, financial institutions, and the likes entrepreneurs from across the continent under the theme Building Resilient MSMEs Through Digital Innovation, Market Access, and Affordable Financing for Africa. Forum will host high-level policy dialogues, capacity building workshops, exhibitions, live pitching competitions, and financing events, including a formal MOU signing with the Africa Guarantee Fund to boost SME support. As Nigeria assumes its first hosting role following Egypt, Ethiopia, and Namibia, this key AU platform aims to empower women and youth-led enterprises, strengthen intra-Africa trade value chains, and advance the continent's strategic Agenda 2063 goals, promoting inclusive entrepreneurship, digital transformation, and sustainable economic growth. And as companies in Nigeria look to increase compliance to ESG practices, geopolitical tension in the Middle East poses a risk to how companies comply. According to Dr. Chizo Elise is MD, CEO, FITC. She believes companies must seek education on maintaining compliance regardless of global issues. She made comments earlier on Business Morning. Take a listen.
First of all, there is the need for stability everywhere in the world. And then when there are crises, there is also a lot of threats. So when we speak about those crises, automatically it impacts the environment. It impacts businesses. It impacts SMEs, innovation, growth. And so all of those disruptions are definitely going to erode the intentions and objectives of EFG. And so stability is important. We need to create the stability. And so whether it's globally or in our local environment. Organizations are beginning to look at, especially Africa, opportunities in climate change, green funds. They're also looking at impact investment. And so they're looking to see how, in Africa, for instance, where are those organizations and individuals that are creating innovation, say around healthcare, green tech, Afritech, agri-tech. Why? Because there is the need to stimulate growth in those industries and sectors so that we can create employment, drive social changes, drive social needs, meet the needs of individuals, the society at large, and build solid, stable economies.
Was Dr. Malaysia earlier on Business Morning there talking about how companies can continue to comply with ESG standards. Now, to our first conversation here, West Africa's economies are entering a critical phase as governments and regional blocs like ECOWAS increasingly reaffirm their commitments to deepening trade integration, enhancing infrastructure, and catalyzing industrial growth. Nigeria's president, Bola Tinubu, has emphasized that fragmented markets where intra-regional trade remains just 10% must give way to coordinated policy, shared infrastructure, and unified value chains to unlock the region's economic potential. Well, joining us to unpack all of this, we have Charlie Robertson, the time-traveling economist. Great to have you on the show.
Thank you very much, Levy. Nice to see you.
Happy to see you too. So, looking at, West Africa, the economies so far, in your view, what are you seeing right now when you look at most of the macros from inflation, GDP, and currency strength? How would you say West African economies are performing so far?
I just did a presentation for a financial group operating across the region. And I think what I was emphasizing to them was how impressive the growth numbers are for a start. So if you look at the AFDB or you look at the IMF, we're talking 4, 5, 6% growth for almost all countries, with the unfortunate exception of Nigeria, still at about 3%. And Senegal sitting up there at maybe 8 to 10% on the back of the oil hydrocarbon exports for this year. So 4 to 6% growth is good. We've then got about 2 to 4% inflation in a lot of the Francophone countries. So you've got a low inflation story, good growth story. It's most of Francophone Africa is looking pretty good. And Ghana's come out pretty well from its default, helped by booming gold prices. The one country that's obviously taking a little while to get going again after years of poor policy is Nigeria. But at least the policies are good now, in that the currency is competitive and there's efforts being made to push up oil production. So I mean, the IMF and AFDB are looking for 3% growth. Maybe towards the end of this year, it's looking better than that.
So, definitely the Trump presidency has brought a lot of attention to trade, right now, and tariffs. Everyone's talking about trade, and tariffs at this point. Looking at the bloc, what concrete steps do you think, West African governments can take to, increase intra-regional trade from about 10% to 20 to 30% of GDP?
It's hard. I mean, I've talked about this with regards to the African continental free trade area, but basically commodity exporting countries never tend to see intra-regional trade more than about 15%. That's true of Latin America, and that's true of the Gulf countries as well, which have had a customs and monetary union for 30, 40 years now. And that's true for Africa, and of course it's true for ECOWAS, and even more so for the WEMU region. So those countries with a common currency as well. still, most of them are not trading with each other. They're trading with the rest of the world because that's where your customers are. So what can you do? I mean, you minimize customs barriers, you minimize kind of trade blockages at the border. You try and ensure that it's not just about tariffs, it's often about non-tariff barriers like safety standards. People can protect their economies. They only are jollof rice can be eaten here. That foreign jollof stuff is no good. There's various kind of safety issues that can get in the way of free trade as well. But we shouldn't expect miracles from the trade side, just because commodity guys don't tend to export commodities to each other.
So do you think, to get this bloc to trade more, that's for regional trade, do you think the ECHO is that silver bullet that would help increase trade within the West Africa region?
No, I mean, no. I mean, we've already seen that single currency tried in the Gulf, and it hasn't made a difference in the Middle East. And we've seen it tried in the WEMU region, and it helps a bit. I mean, there's 2 or 3 countries that do trade like 40% or so with the WEMU region, but no, the single currency isn't going to be the difference. The big difference will be when we get an industrial manufacturing base, when there's products being built across the region that people want, then we're gonna see higher inter-regional trade then. That's why Europe does so much inter-regional trade. It's not the euro. It's the fact that there's so many industries across the continent and people buying off each other.
So talk to me about initiatives we've seen so far now. We have the likes of PAPS, AFCFTA, and there's also the planned Abuja Export Trading Company. Talk to me about how all of these would help enhance, real market integration for this bloc.
I think the impact is going to be very limited, and the point that I've been trying to emphasize in the last few years and in the book, Time Traveling Economist, is that you make money by exporting to the wealthiest people on the planet, and that's how China did it. They made money, and their coastal region is much richer than their inland region. If you go to America, the coastal regions are much richer than the average American wealth in the rest of the country. It's those who can easily export from the coast to the rest of the world, to those rich customers, be it America, Japan, or now China for that matter. That's where you want to be exporting to, and that's why the coastal regions, the coast countries with a coast are richer in Africa than those that are deep inland, like Niger or Mali or Congo.
All right, let's look at some of the trade routes. Now, which priority corridors? We have the Abidjan, Lagos, Mali, Burkina, Cote d'Ivoire. Which one do you think should be industrialized first to maximize value chain impact?
If governments are trying to accelerate development, then prioritizing those export bases on the coast to the rest of the world first has got to be the place to put the money. You've got to ensure that they've got regular, cheap electricity at the coast for those factories to run efficiently. Labor's, sufficient. We've got the human capital across Lagos, Abidjan, Dakar, all of these places. We've got the human capital. We don't have the cheap, reliable energy in most of those cities yet. That needs to be the priority. But once that's up and running, the human capital and the electricity, then they will create their own value chains. They will source the cheapest possible inputs to make themselves competitive. And if you go back to Adam Smith, the grandfather of economics, back in the 18th century, he said the government shouldn't be involved in infrastructure. If there's value there, the private sector will build it.
So, when you talk about, you did mention, China and how industrialized they are, at this point. It didn't start off, like that, for China and most of those Asian tigers. But, looking at the kind of support the Chinese government, gives to, businesses there and, most of the manufacturers, How do you think, the governments in West Africa can replicate that?
Well, they can't, because the underlying reason that China could take off when it did, the same reason that Hong Kong, Singapore, Taiwan, Korea all did as well, which is they had massive local savings. The bank deposits of 50, 100% of GDP. So there was too much money in their economies. And this wasn't because of the government. This was because, I argue in the book, it was to do with small family sizes. That every country that's taken off has seen family size go from 5 or 6 kids, where you've got no money to put into the bank on a Friday night. So the bank's got no money to lend, except at very high interest rates. You go from that situation to the 2 kids or 3 kids that under 3, the Singapore, Hong Kong, Taiwan, and then China all did, or India's doing now. And then your bank deposits are massive. And then your interest rates are low. Then you can afford to build electricity, cheap infrastructure. Companies can borrow money to invest and build plant and start exporting. So it comes after the fertility decline, which is happening across Africa. But it's we're not there yet, except in North Africa, places like Morocco, where they have the industrialization story is well underway.
All right, let's bring it out to most of the countries in the region now. Let's look at Nigeria, and definitely we know the macros. For inflation, we know we have the rebased inflation data, and we've seen a downtrend, so far in the beginning of 2025. So, what do you see? I know you focus a lot on most of the macros for most of these economies, and I'm sure you've been following Nigeria's inflation trajectory. What are you seeing, so far?
I think it's this year, from a market's perspective, the Nigerian inflation story is amazing. That we've had, anecdotally, we're having food price deflation in January, February, all through April. Picked up a bit in May, but there's quite a bit of evidence that the food prices have got too high 3 to 6 months ago. Global prices, we've seen the fuel adjustment now. So I think food, fuel, all the expensive stuff for the Nigerian household, like half of the spending for the month goes on food and fuel. And that's been at world prices. So they shouldn't be going up more than 2% a year. So we're still at, just over 20% on inflation, but I can see it being under 20%. Certainly by the end of this year, possibly quicker. So I think the inflation trajectory, I think we've had the worst, and it was bad. 23, 24, 25 was, 23, 24 was really hard. But I think we're on a much better trajectory now.
And definitely, when we talk about inflation and that downward trend, some would say the rate is not just as fast, as it normally was. But what do you think is that point where, when we go to the markets and the supermarkets, we can actually feel that, that inflation burden is lessening? When do you think we'll get to feel that in Nigeria?
You should be seeing it in terms of the monthly prices. You should be seeing that they're not going up. The trouble is that retailers will often raise the prices when the currency's weakening, when they see a lot of inflation around them. When the currency starts strengthening a bit, as we've seen since the beginning of the year, they then tend not to cut prices. So they're quicker to raise the prices when things are bad. They tend not to cut the prices too much when things are good. So it's not that you will feel your monthly bill go down, but I think you should feel that your monthly bill is not going up anything like as much as it was.
Right, and definitely you are the time-traveling economist, and I'm sure you're following most of the tension there in the Middle East, and with some proponents expecting some kind of escalation or maybe a de-escalation coming. But what's your crystal ball telling you about the global economy at this point with what we're seeing play out in the Middle East?
Well, my guess is that we're going to see oil prices at $60 to $65 next month. So all of the spike up we're seeing in oil is political risk. It's not about supply. Iran has been exporting more oil since the Israelis began to attack. So we've got plenty of oil. The markets have priced up oil on the fear that either Iran's exports get cut or that somehow the Straits of Hormuz get shut by Iran, which is how Iran makes its money, of course. 35% of its budget comes from oil exports via the Straits of Hormuz. It would be a dangerous thing for their own regime for them to cut oil supplies. So my guess is the Israelis will call a halt to the campaign within a week or two, and the oil price will drop $15. So when I think about Nigeria, for example, in that context, it's been a lovely 1 month boost. It will have been a lovely 1 month boost to oil revenues and the budget. But I'd be surprised if this carries on more than 3 months.
All right, definitely. We'll keep tracking. Hopefully, de-escalation. Definitely investors would love to see that going forward. Thank you. It was always great having your perspective. That's Charlie Robertson, the time traveling economist. Thank you for coming on today.
Pleasure.
All right, we'll take a break now. When we come back, we head straight to the markets. What are the reactions? We'll find out. That's the moment. Do stay with us. All right, let's head straight to the markets now. We have Willie Bonga with the details of what's playing out with the global markets that we track and the local bourse. Great to have you.
Hi, Laddie.
Will, what's the picture, at this point? Are we seeing investors overreacting somewhere and maybe not reacting?
Well, it's kind of like surprising because we're expecting some red markets at intraday today following U.S. strike on Iran. But we're seeing, despite the strike, we're seeing markets even in Middle East, trading in green at intraday. It's surprising. It's like, because right now investors are more like, okay, oil prices, there's no, like the time traveling economist mentioned, there's supply. So there's no tension, there's no pressure. So we see that there's cutting gains in terms of the oil prices. So he said it will, taper down to about 65 naira. So we're seeing a lot of, ease and intentions now, but just watching and being cautious. I think that's what we're seeing in the market, where investors are definitely playing and, gaining as we're seeing it.
Right. Quite incredible.
It's
seeing
incredible.
These markets and how some of them are reacting at this point. But there was an overreaction
over
in the crypto market.
In the crypto market.
That one doesn't close.
Oh, well, that doesn't close. It's open 24/7. So I think it's more vulnerable to, sentiments and things that are happening, especially over the weekend. So you see that market drop, and then it's very natural to see Bitcoin drop 99,000. But other markets opening today, well, I think they're opening on the upbeat mode that, definitely.
Even the NGX.
The NGX is in the green. It's just sustaining, that positive, momentum we saw last week. So we're hoping that they continue in the green.
Let's see.
At the close of business.
Fingers crossed.
Fingers crossed. So we see major markets, as we've spoken, in positive territory. At intraday, Nigeria's NGX was positive, up 0.18%, still at 118,000 points, still very bullish. GSE in South Africa was trading higher, slightly up 0.18%. Let's look at the EGX in Egypt and see how they traded. They traded more than 1% up, 1.03%, 31,376 points. And the NSE, that's in Kenya, Nairobi Securities Exchange, was up on Friday, closed Friday's trading session in the green, 0.73%. That's coming from a bit of sell-off, profit taking, but they're bouncing back 145 points. When I say 145,000, Kings markets are moving really fast these days. Can't keep up. But you're going to dig deeper into what's happening at the NGX and see what's driving price movement, the momentum. And we have Onose Asotie Naolo, Senior Investment Analyst, Main Street Capital. Good afternoon, Onose. It's good to have you.
Hi, Will. Thanks for having me.
Hi, Onose, what are stocks that are moving the markets at intraday? We're causing this price action we're seeing and sustaining the 118,000 points we hit on Friday.
Well, today, like most days, so far in this rally, it's been banking stocks and some consumer goods stocks. We're seeing Zenith Bank, one of the highest volume and value stocks being traded. We're also seeing Access Bank, same with volume and value. Okomo Oil, surprisingly, not surprisingly, because they had a really positive Q1 result. Okomo Oil right now is on full bid. And, we're also seeing some interest in Nigerian breweries, right now in the intraday.
Honestly, today, so just look at well, we can't help but talk about the geopolitical tensions, what's happening in the Middle East, how that trickles down, impacts markets in Africa, especially Nigeria. What are the implications, and what are you seeing for markets? How does that either benefit, or how does that impact the markets as we speak?
Well, so looking at the what's going on with the Strait of Hormuz, we're already seeing some impact. The first one is, so I'm going to talk about like capital market and stocks, and then I'm going to talk about just the general economic market. So we're looking at Dangote refinery, right? And we already saw situations where on Friday Dangote increased the ex-depot price, of oil from 825 naira to about 880 naira, and that's because Dangote we have seen an increasing reliance on oil imports from the US. I mean, Dangote plans to import about 17.65 million barrels this year, and it has already imported about 3.65 million barrels, over the last 2 months. Now, if we're seeing a growing reliance on imported oil, from Dangote refinery, then it stands to reason that oil prices will go, PMS prices will continue to increase. And then if the tension or the what's going on in the Middle East continues to escalate, if Iran actually goes ahead to block the Strait of Hormuz, and the US retaliates, and then there's going to be a higher premium on oil, and oil prices go up, it means the cost of Dangote refinery, Dangote's input costs go up, and cost of PMS, that we have to pay goes up. If that happens, you look at the energy sub index. Last inflation that came out last week, or was it 2 weeks ago? Energy sub index was lower, which was a good thing. We saw in core inflation, being significantly lower or trending downwards, even month on month, which was good. If this happens, we're going to have a situation where that trend is reversed, and we're seeing higher core inflation month on month. We're already seeing higher farm produce inflation month on month, so we might now see inflation start to, stop the disinflation trend we saw for the last 2 months. So that's on the economic side. On the stock market side, companies that are in the oil exploration, the upstream sectors that sell, crude oil should do well. Seplat, Owando, and Aradel are three companies that immediately come to mind. I know that for Aradel, their full year Q4, their full year 2024 result was really positive. I know they increased their outputs to about 50,000 barrels per day, and they sold at an average price of $82 per barrel. Now, for this year so far, oil has not been near that price. So you say that Arado's price hasn't really been, really good this year, because people are thinking, okay, if the average price that they sell the oil is not going to be as high, then their margins might not be as good this year. But if we now have a situation where oil price begins to rise in the international markets, then their margins begin to widen. And the same thing with Seplat too, is I think at about $100,000 barrels per day production. And even you have Owando, which recently got the refinancing from Afrexim to get to 100,000 barrels per day. So these companies that sell oil, the more oil prices increase, the more their margins increase, and we should now see some more interest in them. And we even saw that last week with some increases in Seplat being up about 7 to 8%, and Ardell as well.
So are we not seeing other sectors in the markets going to benefit from these tensions? Because definitely oil and gas, we've seen Seplat, Owando, you mentioned, benefiting, but we did hear that analysts talk about prices, oil prices going to come down to about 65 naira. That this current price we're seeing is just, the tensions that is driving the prices up, and so it's not sustainable. Do you see other sectors taking advantage of maybe lower oil prices and the tensions to actually strengthen themselves in the market?
Well, maybe logistic companies, right? Because I think they can be a bit more consumer facing, and if they are consumer facing, they could easily pass off the cost, to consumers, but aside that, and maybe shipping companies, right? Companies that are into shipping, because if there is an increased premium, it's really easy to slightly increase your margins if the prices of everything is really going up. You know, But for at the top of my head, apart from logistics, really logistic companies that have to do specifically with fuel and oil, I don't really see any other company or industry that benefits, because every other for most other industries, oil is an input cost. So if the input cost goes up and you can't really pass on the corresponding increase to consumers, then you're gonna have to take the
The
hit
banking
for your
sector now,
margin.
we see them bouncing very quickly from that CBN regulatory forbearance we saw last week. We did see that drop off like hot potatoes for banking stocks, and then we saw bargain hunting, investors picking them up very quickly. That was a very quick rebound, don't you think?
Yeah, we love banks in Nigeria. That's the truth. And so the market doesn't like insecurity, right? Or instability. And so when that came out, it was a shock, and the market was shocked, right? But the truth remains that for a lot of banks, their interest incomes are up,
Okay.
even in Q1,
Onase, could you hold your thoughts? We just want to quickly go over to make a quick announcement to our DSTV viewers. Aladi, I'll leave you to that.
Yeah, so definitely we're joining, that's for DSTV viewers, the launch of the Renewed Hope Mechanization Program. That's a live coverage there. If you're watching this on other platforms, you can continue, but that's for our DSTV viewers right there. And definitely, Will, I'm really following this conversation, right now. Just trying to know the good spots where investors can pile funds with what we're seeing, playing out right now.
What sectors we're going to benefit apart from oil and gas that we can tap into? And you talked about logistics, but not a lot of shipping companies are listed on the NGX. We do know
Exactly.
NACO, that's freight company, but not a lot of logistics company that would benefit from this are listed. So I'm wondering how investors are going to tap into it if we don't have them as listed companies.
Right.
So maybe it's something the NGX should look into to get in more companies from that sector and for that industry, and not just wait for the high flyers, the big ticket guys from oil and gas, banking, and then leaving the other sides that actually benefit investors.
Right.
So honestly, I was just speaking about it. I know that we did interrupt you for a bit there. You just pick up on your thoughts and let us know what you think about the banking stocks, as you were saying. But just to throw it in there, we think the NGX. What do you think the NGX should be? Maybe when you're done with what you're saying, what do you think the NGX should do about listing companies in the shipping industry, in the shipping sector, to help investors, but participate and profit from any gains that we could get from there, especially now that they're the ones right in the middle of this whole tension?
Oh, okay. All right. So let me just the banking and then the shipping thing. All right. So for the banks, a lot of their interest earnings are going up, and they're seeing strong profit year on year. So when you had a situation where that was a shock, the forbearance announcement was a shock. But when banks came out to say, okay, look, we are not going to stop dividend payments, we should, with Access Bank or Access Bank, Zenith Bank, and even First Bank, putting out statements saying, look, one saying by June 30th, we should exit forbearance, or forbearance shouldn't, go past this year. That in itself is enough to kind of dissuade investors, or to kind of calm the jittery sentiments down, because underlying these companies are strong companies fundamentally. So once we can get some sort of assurance, that this is not going to really impact their earnings, then there isn't a reason why we should buy. And for a lot of investors, they took those public announcements as, okay, the bank is aware, they are in talks with their counterparties, they're in talks with regulators, and they are doing something about these loans. And that is enough for investors. And investors are, look, no problem. We just need to know that you're doing something about it, you're aware, and it's not going to affect your normal core operations, and that's fine. And that's what we see in the market right now.
It's just
So
surprising.
for logistics and shipping companies,
Okay.
well, yeah, so the NGX, well, I think the NGX can do a couple of things to make the market a bit more attractive. Number one is the depth of markets. I remember, was it Legend Internet that launched on the market several weeks ago, and for a while we saw a hike in their stock price. But then after a while, I believe that was when investors were able to really start to sell their stocks, we saw a crash. And that's one thing we see on the market, that I see on the market, because I'm in the market every day, where you might be up maybe 10-20% on a particular position. And if a general consensus is reached that, okay, that current price is a bit too high, there's literally no liquidity on the market. Like right now, if I wanted to buy Okomo oil because I think Okomo is good, I can't buy Okomo oil because there are no offers. Nobody is selling. And until somebody sells, you can't buy. So situations like this might dissuade companies from really wanting to participate in the market. Because unless you are a really huge company and there aren't so many companies that can come in and immediately have the type of liquidity that a Zenith Bank or an Access Bank or a GT might have, you might run into certain problems with your stocks, your stock prices. And while you might say, okay, the stock prices may or may not reflect the current intrinsic value of the company in the short term, it does affect investor sentiment in a lot of cases. Especially if you are just, as a company, you are just coming in. You might come in at a valuation that people might think might be a bit too high, and then for the next 12 months, your stock prices are low. And so that has happened quite a bit. And so that's just one of the issues that we have, with the NGX. And then even access to the NGX. I mean, there are like brokers and brokerage companies, but a lot of retailing, a lot of domestic volume comes from institutions, not even retail. So you are in a market where it's really dominated by institutions. So if you now have a situation where a lot of analysts are coming to the same sort of conclusions, you see that's why you now see some stocks get skewed. That tends to happen. Stocks get skewed either to the buy side or to the sell side, where you see it's all bids or all offers, because you have situations where analysts tend to come to the same conclusions, and then you see the same set of sort of moves being replicated in the market. And that's not really so great for market depth and market health. So these are some of the things that companies might look at and say, okay, if we don't have to raise funds to equity, we'd rather just stay out and just do our thing.
Well, we just hope that the regulators look into this and ensure that the atmosphere, business environment is right for investment, and then the laws are not too rigid for them to be able to come into play in the market as well. Thank you so much, Onose Asotie Naolo, Senior Investment Analyst, Main Street Capital, for sharing your thoughts on Business Incorporated.
Thanks for having me.
We do hope the markets close in the green, but let's look at the Middle East now, where major exchanges were in the green at intraday. Dubai was up over 1%, 1.06 to be precise, and this is despite the U.S. strikes on Iran. Still, Abu Dhabi was also up 0.34%. Let's look at Saudi and Qatari indexes. They were also in positive territory at intraday, 0.95% and 0.51%. Looking to the U.S., how did they fare? What was the reaction? Stock futures were little changed on Monday, even after the U.S. entered Israel's war against Iran over the weekend by striking 3 nuclear sites, as the increase in oil prices was relatively tame. Futures tied to the Dow Jones Industrial Average slipped 0.07%. We see S&P futures also slipping 0.01% after trading overnight in the red. We see the Nasdaq futures moving down 0.06%. Now, the U.S. launched attacks on Saturday, as we know, at Iranian sites in Fordo, Isfahan, and Nantes, surprising investors who were expecting more diplomacy to possibly take place after Trump said on Friday that it would make a decision to attack Iran within the next 2 weeks. But that's not what we saw. We saw U.S. striking. We'll watch and see how that happens. So Asia markets, let's see how that Fed at the close of business. We see the Nikkei. We have that very quickly. Nikkei's, we see them down. They were majorly in the red, declining after the attack, U.S. attack on Iran. We've seen Japan 0.13% down. South Korea also down 0.24%. In China, we see the Hang Seng Index up, however, bucking the trend, up 0.67%, while the mainland China also gained. We saw it up 0.65%, while India's benchmark Nifty 50 dropped 0.56%. Well, those are the reactions, a mixed bag for Asia markets, especially looking at what's happening in Asia and looking at in the Middle East, and looking at what's going to happen. Is Iran going to strike back? That's the question.
Right. That's the big question. Right now, I'm sure investors on edge, even though we're seeing some markets reacting positively, somewhat. We'll definitely find out. Thank you so much, Will, for details there on most of the markets that we track. But let's take a look at European markets now and how they're doing, after all that hot event that played out over the weekend there. With the Israel-Iran war. DW correspondent Chiponda Chimbelu joins me now. Great to have you, Chip. I know you have your eyes there in Europe. How are European shares trading?
Well, Laddie, you did mention, it was mentioned there that that U.S. futures have not been that much affected. As for European shares, they fell at open, recovered, and now they are trading lower again. And it was almost as though investors couldn't figure out how to respond at first, but they have chosen a direction now. And the Pan-European Stock 600 is actually down 0.4%. And the DAX, which is, of course, Germany's blue chip index, is down about 0.5%. Now, there are, of course, fears here that the Iranian response may include the closure of the Strait of Hormuz, which is an important waterway for energy exports. So that is, of course, crude oil and liquefied natural gas. And that is, of course, why we have also been seeing higher oil prices since Israel launched those strikes on Iran just over a week ago.
I see German Chancellor there called for Iran to negotiate with Israel, so far after the U.S. bombed the country's nuclear sites. What's the reaction in Europe?
Well, yes, the German Chancellor Friedrich Merz is actually on the same page as other European leaders who are also calling for de-escalation and talks. And what they want to see is a diplomatic solution. Now, Germany's Chancellor was only informed of the U.S. bombing of Iran after the strikes had happened. And that, of course, happened a day after the foreign ministers of Germany, France, and the UK met with their Iranian counterpart, which was, of course, on Friday in Geneva. And that was because they wanted to look for a diplomatic path to a solution for the war between Israel and of course, Iran. Now, this decision, of course, by the United States to join the conflict does show that Washington doesn't see the EU as an equal partner. Meanwhile, of course, what we are seeing in terms of business responses are European airlines canceling flights to the Persian Gulf, and Germany's flag carrier Lufthansa, British Airways, Air France, and KLM have all canceled flights to the region because, of course, there are concerns over safety, and that's why also travel stocks have lost around 0.8% in markets today. So there's a lot going on there, of course.
And definitely, most of our regions are trying to count the costs now and expected impact. But how does the ongoing, escalation affect Europe?
Well, the major concern, of course, will be the impact on energy prices, and oil prices already did spike as a result of the war before the U.S. even joined. And that is because, of course, Iran controls access to the Strait of Hormuz, which is that major waterway, and for oil supplies coming out of the Persian Gulf. And the question now is, of course, whether Tehran will shut the route and block access to it. And those are the major concerns here. But, of course, the U.S. involvement could also affect other geopolitical tensions and conflicts. For instance, the role that the United States will play in Ukraine, for instance, and that is because, of course, they could be overstretched militarily and diplomatically, and they may have less attention for other global issues. And depending, of course, on how long this conflict lasts and its impact on the Middle East, it could also affect migration patterns, which, of course, are an issue for the Europeans as well because of the politics here, which are highly polarized when it comes to migration. There's also, of course, a European foreign ministers meeting today. They're meeting today to speak. That was scheduled before this had happened, but we can maybe look out for a response from there. And then, of course, tomorrow there is a NATO summit in The Hague, and U.S. President Trump is actually expected to be in attendance. So there's definitely more to be happening from Europe in terms of that conflict and what can be expected from the Europeans, but also from Trump. If he does show up in The Hague tomorrow or Wednesday, we'll hear more about whether he will be working together with the Europeans to find a solution to end this war, or whether the U.S. is going at this on its own with its ally Israel as well.
I guess so much for investors to chew on definitely this week. Thank you so much, Chip, for bringing us up to speed on what's playing out in Europe. Thank you.
Sure. Thank you. Cheers.
All right, to other stories now. See, according to the Central Bank of Egypt data there, remittances from Egyptians working abroad that rose by 72.3% in the first 4 months of 2025, reaching about $12.4 billion compared to approximately $7.2 billion during the same period in 2024. Moreover, remittances jumped by 77.1% in the first 10 months of the current financial year, that's 2024-2025, reaching about $29.4 billion compared to approximately $16.6 billion during the same period in the full year 2023-2024. Remittances from Egyptians abroad are one of Egypt's most important sources of foreign currency alongside tourism, the Suez Canal, and export revenues. I will see in Uganda now, see the Uganda signed a tripartite agreement with Tanzania and Zanzibar to deepen regulatory cooperation in the oil and gas sector as the East African nation pushes towards its targets of first oil production in 2026, despite lingering uncertainty over the timeline for its long-delayed refinery project. The deal signed in Entebbe, June 17, brings together Uganda's Petroleum Authority, Tanzania's Petroleum Upstream Regulatory Authority, and the Zanzibar Petroleum Regulatory Authority. I was seeing Angola, the Angolan president, João Lourenço, has called on U.S. companies to expand their investment in Africa beyond traditional oil and mineral extraction to industries such as automobiles, shipbuilding, tourism, cement, and steel. American companies operating in Angola already benefiting from a favorable business climate, as according to the president there. He also said the U.S.-Africa Business Summit in Luanda that they want to see a broader engagement when it comes to other industries in that region. Well, let's get a check at what's playing out with other markets that we track now. And yeah, talking about reactions, we're seeing overreaction over the weekend there. That's from investors in the crypto space. We're seeing Bitcoin. It did dip below the $100,000 psychological level, but managed to get back, above that. And we see Ethereum there, $2,250, down 1.5%, and just few pockets of green on the coin 360 there, with some stable coins showing XRP trying to hold up that $2 level. Let's get a check on some of the headlines there. We see Texas there, they've approved the Bitcoin reserve that the Texas governor, Greg Abbott, he signed the Senate Bill 21, creating the Texas Strategic Bitcoin Reserve, the first state-run fund in the United States to invest public money directly into Bitcoin. The move positions Bitcoin as a long-term hedge against inflation and financial risk in the state's investment strategy. Then we see Coinbase also in the news that the trademark issue there in the EU, that's the EU General Court, they slapped down the latest attempt by Coinbase to have a Japanese exchange's trademark over the word Coinbase. That was revoked there. Coinbase was appealing an earlier decision that found that the US-based exchange had failed to prove that BitFly, the Japanese exchange, had secured a trademark over the word in bad faith. This week, the court agreed that Coinbase had failed to prove its claims. Then, talking about buying more Bitcoin, Meta Planet, they bought more Bitcoin there. The purchase, an additional 1,111 Bitcoin for approximately about $118 million, expanding its Bitcoin holdings amid growing corporate adoption of Bitcoin as the Treasury reserves there. According to a company filing on June 23rd, the Tokyo-listed firm acquired a Bitcoin at an average price of about $106,000 per coin. And definitely we're seeing Bitcoin dropping below that 100,000 level, but still maintaining it back. So definitely a loss from that purchase for Meta Planet. All right, let's talk to Sheil Dania now, as CEO at Alpha Geek Technologies. Hello, Sheil.
Hi, Ladi. Good afternoon.
Good afternoon, Sheil. It's great to have you. So, definitely, I don't know what you'd call what we saw over the weekend there with Bitcoin selling off below the 100,000 level. Was it an overreaction? Hello, Sheil. I don't know if you can hear me. All right, we'll try and get Sheil back on there. I think we lost connection with him, but definitely it was a big reaction we saw for Bitcoin over the weekend, and definitely it doesn't help that this asset class trades 24/7. There are no breaks there, so we saw the reaction there with tension in the Middle East, and that definitely impacted Bitcoin. It did fall below that 100,000 level, but we saw a recovery. So, definitely the shorts from the weekend, if you're an investor that tried to short Bitcoin over the weekend, definitely you're in profit, at this point, seeing Bitcoin lose that 105, 104,000 level. And definitely that, once you see Bitcoin react majorly, the top cryptocurrencies, they take a bigger hit, because Ethereum, that dropped about 10%, over 10% over the weekend there, and still hovering around $2,250. So it was a major wipeout for major altcoins in the market. Definitely, we've seen some of these altcoins try to get back to their previous highs, but when there's a sell-off, definitely we see the altcoins take a bigger hit. Bitcoin could go down 5%, but with the altcoins, you see bigger drops of about 20, 40, 50%, depending on how risky that altcoin might be. And definitely there was a time where the meme coins were getting most of the attention, but that has definitely changed. So far with the big drop, we're seeing most of the meme coins there drop about 30, 40%. So it's hard, finding that safe haven, in this market. But the stable coins, they're supposed to play that role, when it comes to volatility in the market. And definitely we're seeing investors, try to run into safety. I don't know if we have Sheil Dania back now. Hello, Sheil. Do we have you now?
Yes. Hi, I'm here.
Oh, fantastic. All right, Sheil. So talk to me. What are your thoughts, the reaction with the market over the weekend?
Over the weekend, I think it's primarily been around the US-Iran conflict. That's what has been affecting the market generally over the weekend. So a lot of people are trying to move to safer asset class as opposed to speculative assets like Bitcoin and Ethereum. But we're saying that as the day goes by, as the week opens, everybody's getting a clearer understanding. More businesses are taking advantage of buying the dip, which is buying more into Bitcoin, as we reported earlier on, which is supposed to be the ultimate reaction. But you know how the world works. Once there's a major news of certainty, people want to move to a better asset class.
So, talking about moving to safety at this point, we're seeing that's for gold. Gold is not really moving much to the upside, at this point. So is safety the US dollar or gold in your opinion?
Cash is king. So during any, people know that there may be issues. Maybe if Iran decides, if the whatever it is that's going on affects, oil prices and whatnot, people want to be liquid enough to go into those kind of commodities. But a lot of people might want to go into gold, but usually when we have all these kind of issues going on, especially wars, speculatively, a lot of people want to hold cash, which will be the US dollar.
All right, thank you so much, Sheil Dania, there, for giving us your time today. We'll definitely find time to drill more on what's playing out in this market. Thank you so much.
Yes. Thank you. you for having me.
All right, so there you have it. That's how major markets we track are looking today. Some are in the red, some are not reacting, that much, at this point. But at the end of the day, investors have to make that investment decision. We'll bring you up to speed on what's playing out with the markets tomorrow. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.